Hey guys, how you doing? This is FaisamTrader, and I wanted to go over certain things that I've been seeing for the past little while. I've been on StockTwits, Twitter, Facebook, iHub, and I see the same thing happening over and over and over again. And people are just you know, getting killed. Their accounts, they're just getting destroyed. And especially now when there are so many reverse splits in the market, everything's moving so fast, up and down, that people are just at their worst right now. It's really bad out there. And I said if it takes me 15 to 20 minutes per video, it's not really gonna kill me here, right? It's not gonna destroy me. It's not gonna kill my time. It's not a big deal. So I said, you know what, I'm gonna try this. I'm gonna go over it and see how it works. So my goal is to make at least a series of 4 different videos, and these 4 videos will be talking about why you lose money, why people lose money in the markets. There's the obvious that's out there already. I'm not gonna go over all of the obvious. I'm gonna go over some of the obvious, and go again. The goal here is just to help people understand what's really going on. There are some of you that are gonna watch this that are already experienced, that know all of this. I totally understand. That's not a big deal. You can just ignore it, close the video, and move on with your day. This is really for those people that are really confused. It's difficult to kind of understand what's really going on. And I just thought, hey, you know what? It's just a few minutes a day. It's not a big deal, and maybe I can help one person, maybe 2, and that's the goal. Maybe 1 or 2 people I can help with each video, and if it helps more than that, then that's fantastic. So what we want to do here is we want to go over this video, and we want to talk about the most latest day. Because unfortunately I am unable to get a 1-minute chart on anything 2 days old, and I'll see what I can do here, and maybe I can work something out. So this is an example of how people find their stocks. Like for me, I use Trade Ideas, and on Trade Ideas these are the scans that I got on Friday. Right, it was a slow day. There are not many scans here, but basically this is what I got on Friday. And then as I get those scans, I go over the chart, and I basically see what's going on with every stock that I see on the list, right? So some of them they move right away, some of them they move later, and you just got to analyze the situation and see where it takes you. So for me right now, if I'm looking at the 1-minute chart, the first stock that I saw was AEZS, and I saw PRAN at the same time. I saw AEZS and I said, okay, there's not a lot of volume, so I'm not going to get into that. So some people, the first stock they'll see, they'll jump in and say, hey, listen, you know what, maybe this thing will go, I'll take a chance and maybe it'll work out. But again, you got to look at the volume, right? Typically, you shouldn't be getting into a stock that has less than 150 to 200k volume at the beginning of the day. I mean within the first minute or 2. Because like 100,000 volume is not a lot for a stock under $5. It's not a lot. Like if somebody's actually interested and the stock is actually going to move, 100,000 volume within the first minute or 2 is actually not a lot. And we'll see that with certain examples that come up ahead of us, and we'll see what happens. At the same time, too much volume at 9:30 could mean trouble. It could mean that, hey, we're not going anywhere. We've already moved, and it's not a good idea. So the next one we saw was PRAN, and the volume was 640,000 at 9:30. So that means pre-market we had a lot of volume already. A lot of volume would be anything over maybe 400k to 500k. It's a bit too much. If you're over a million, maybe over 2 million pre-market, that's really too much. That's like, what are you thinking? Right, so these are the things that we need to remember. A lot of these things, again, some of these things are already mentioned in a lot of videos that are online. A lot of people online are already talking about that. So Obviously, I'm not trying to go over the same thing over and over again. The next one that we saw was SMSI. I had about 40k. These are rare cases that the stock will have 40k and it'll actually move, a good 10%. This one did, and again, it's a risk that you're taking that it might work and it might not work. There are times where I will enter these stocks. I will look at the chart and I'll see what it's like, and I'll make a decision. The next one was CFBK. Only had 18,000. Now the next one that we had was ENRJ. I entered this stock at 59, and I knew it was Friday, and I knew that things are not that amazing. So I was looking for my typical 4% move. I actually got an 8% move, and I was really happy with that. I got out at 63. The stock went as high as, what is this here? It went as high as 64. Now a lot of people, they'll be like, oh, how did you know the top? Right? I didn't know the top. I was looking for 63 when I sent out the alert, and what it does for me is I don't physically sell the stock myself. I use bracket orders. Those bracket orders basically say, okay, you want to buy this stock, and tell us where you want to sell it, and tell us where you want to place a stop loss. So my stop loss was already set at 55 cents, and my sell order was already set at 63 cents. One or the other had to happen in order for me to get out of the stock. And basically, if you bought at 58, it should definitely sell for you. It should sell on this red candlestick, as the bid would have been 53 here, or on this green candlestick where the bid would have been 53 again, or 63, sorry, 63 and 63. It should have sold for you by itself if you had that sell order. Now the market that we're in right now, the way things are going, you kind of really have to start using bracket orders, right? You really have to do that, and you have to say, okay, how much am I looking to make here, and how much am I willing to get out with? And the reality is, if you can get 5 to 7% on a trade, you should be more than happy with that. So these are the things. If we're going to be greedy, then we're going to have problems. 62 cents would have been 5%. Even 5% on a trade within a few seconds or a few minutes is not that bad. I mean, especially for a slow day like Friday. You might not make $1,000-$1,500, but at least you'll make that $200 or $300 that'll help you deal with the stop loss that might occur in the future. The real money that you make is on a runner. So the goal here is, you sell 75% of whatever you have at 4%, and then you let the rest run. Let's just say this stock went up to 75 cents or 80 cents. That's where my real profit would have been on the last 25%. The first 25% is really just to help me cover my stop losses. Now, I haven't heard of this strategy before. I wanted to share this with people because it's been working for me for almost a year. There are times where I'll go 4, 5, 6 stocks in a row and I won't hit my stop loss. So even that, 25, even that 4%, 5 times in a row really makes a big difference, because I don't deal with any losses in that time. Now 5% of stop loss is a lot, is huge. So when you do hit 4 or 5 stop losses in a row, which hasn't happened to me in a very long time, I think the maximum I've gone is about 2 or 3, at least over the past 12 months. But that's basically what I do, and it works for me. And basically you'll hold the rest as far as you can go. Obviously it's not that easy, because some stocks don't move right away. Some stocks they take forever. But you need to find a strategy that works for you, where your emotions are not involved. Now, if you place a bracket order when you buy the stock and you don't go change it, because it's extremely annoying to go change it, because you have to cancel the bracket order and then you have to go place another order, and that time you can't really be watching the stock because there's so much else going on in the market. So I really don't have time to go watch it, and that works out really, really well for me. So we're going to go over the first stock here. AEZS, obviously there wasn't much volume. PRAN, this one moved pre-market, and I was watching it obviously to see if it would go higher after the market opened. The high for that one was around this 372 level, and I wanted to see if it would go higher than that. It didn't go higher than that at all, and at the same time I drew a line from near the bottom here to the next bottom here, to the next bottom here. The more points that I can get, the more chances that the line that I'm drawing is correct. Now, sometimes it doesn't work that way. Some stocks are just extremely volatile, and you don't really get a chance to make a move. So if you look at the stock here, it goes straight up to that line that I drew, and it hits that and it comes right back down. So I wasn't even watching this. Like, I wouldn't buy this at 373. I would probably buy it a little bit higher, because 373, they could be a fake out. There have been a lot of fake outs in the recent past, and we need to be careful of those breakouts. If you are going to deal with some sort of a breakout, a false breakout, you have to be in a situation where you're like, I'm not looking for a lot here. I'm just looking for a quick spike and I'm going to get out, like a quick scalp. But the problem is we're looking for so much because our accounts are so small that, with $1,000, with $5,000, with $2,500, 3 or 4% doesn't make us a lot of money. The reality is you need to get a strategy that works really well, and then you can use a margin account, to make that 4%. So let's just say you start your account with $1,000. You have, 3 to 4 times the margin. So let's just say you go in with, $2,500 into a stock, and you're like, what, I'm just going to make 4% on it. It's not a lot of money, but it's more than enough to cover the commissions. And you're quickly in and out. You place your bracket order, you're in and out. And if you have the correct strategy, you should be winning on 7 out of 10 trades. So 7 out of 10 trades, you're going to make that 4%, and some stocks are going to continue to run higher. So you're going to make money on that last 25%, and that's basically what it all comes down to. So for me, PRAN was like, okay, you know what? First, I need to get above 368. And then I need to get above 372, and then I need to stay above 372 for a little while. Now, usually, right after the market opens, when a stock gets above 372, and it gets above the pre-market high, it doesn't just stop there, it just keeps on running. If it keeps on running, I don't mind, I'll stay out, right? I mean, it's that simple. It's my choice. And nobody's going to put a gun to my head and say, buy this stock, right? It's my choice. I'm making this decision. I need to grow up and say, hey, listen, I got to be responsible with my money. Now, if there was a quick spike above 372, I got filled at 373, let's just say, and it came right back down to 346. Now I'm down so much money that I'm like, okay, maybe it'll come back up. But the reality is that if I didn't buy at 373, and if I just had a little bit of patience, and I waited for some sort of confirmations to get me above that level, I would have never gotten stuck in that stock in the first place. So that's the first mistake. Buying on false breakouts, not on real breakouts. That's the first mistake. The second mistake that I make, or I've made in the past, is I don't put in bracket orders. So I'm trying to sell the stock myself. So the stock, comes down to about, let's just say 363. I'm down, let's just say $100. I'm thinking, hey, you know what? The stock might rebound, and I might, just come back up. And the stock never comes back up, and the next thing you know, the stock is sitting at 337, and I'm down almost maybe $250 to $300 now. So I'm like, oh man, what is this? This is nonsense, right? And I just continue to hold, hoping that it will rebound if I don't know what I'm doing. Now, these moving averages that I have set up here, they're not just there to make the chart look pretty. They're there for a reason. These moving averages, they're basically telling me what's happening with the stock, where it's headed. And when I see the moving averages turning downwards, like I see them over here in this area, right here, and they're moving below, what is this, the 50 moving average, it's a clear signal for me that the stock is heading downwards. So let's just say, these moving averages are below the 50 now, and the price is below the 50, and the price is actually below the 100 as well now, right? And you can see how it tries to cross above the 100 and it fails. It gets close to it again and it fails again. It's a clear signal that I gotta get out of the stock. So now, not only is the 100 a serious resistance because it failed twice here, now the stock is in such a bad shape that even the 13 and the 20 have become serious resistance levels, right? We're in the same situation now. So now, not only the 13 and what we had here was the 200 was giving us some support, The green line was giving us some support in this area, but now that even the green line has given up and said, hey, listen, we can't even do that anymore. So we try to get above the 50 and we failed hard, really hard. And a lot of people probably bought here. Some people have a strategy where they say, if it moves above a certain moving average, I'll jump in. And it fails again. And we come back down and we keep on going. So the next time the stock actually makes another run is that it attempts to cross above the 50 here and it fails, but it tries again and it fails again, and then it tries for the third time and it finally gets some sort of a move. But if you bought at, what is this, 375, even 365 or 373, which is pre-market break, and you're still holding this stock, this run means nothing to you. You've basically said, you know what, I don't care about my money. At this point, that's exactly what you feel. You're like, you know what, who cares? Let this $3,000 or $4,000 go down the drain. I'll just, add more money to my account. Now, is that logical? Does that make any sense? Like, think about it, right? It makes no sense at all. You cannot trade this way. You cannot trade, not only trade, you cannot do anything in life this way. Like, let's just say, you're going to work, right? And you have to get to work at 3:73. Let's just say it was, 8 o'clock, and that's when you have to be at work at 8 o'clock. And you get to work at 8:01. And then your boss says, hey, you know what? Why are you late? And instead of saying, hey, sorry, boss, I'm late, I won't be late again, which would mean you getting out at, let's just say, 360, or when it crosses below the 50, or even the 13 moving average, which is what I like to use a lot. At 359 is like me telling my boss, I'm sorry, it won't happen again. I go the opposite way and I say, hey, you know what? Who the hell do you think you are talking to me like that? Now, first thing is, when I signed up, right? When I signed up for a job, I said that one of the things that I do well is that I'm punctual and I'm on time. Yeah, you can have a mistake here and there. You can get late, traffic, you can wake up late, anything can go wrong. You can be late. At least when you're late, own up to your mistake. You got in a 73, which you shouldn't have. The stock comes down, own up to your mistake. Own up to it. Stand up to yourself and say, you know what? I don't have to win 10 out of 10 trades. I have to win 7 out of 10 trades, or even 6 out of 10 trades. This is one of the 3 or 4 stocks that are not going to work for me. That's exactly what I want you to be thinking here. That this is one of the stocks that are not going to work for me. This is one of the 10. If you want, grab a piece of paper, grab a calendar, and tick off one stock and say, out of the next 10 stocks, this is one of the losers that I had. And move on to the next one. Because if I didn't do that, if I was just stuck in that one, I wouldn't have money to get into AEZS. AEZS, I got in at 332, which was right about here. And I held this stock. My first sell order wasn't 374. It wasn't there. I sold at 342 because I had a plan before I got into the stock. I said I want to sell at 342, and I'm okay with that. I'm comfortable because it is a slow day, and that's exactly what I'm looking for. So I sold at 342, and then I held the last little bit because it didn't touch my stop loss here, which I should have. Again, I made a mistake. I should have moved my stop loss to 332 once I hit that for the last 25%, but I didn't because it was kind of slow, and I wasn't too worried because I still had a stop loss for 5% below 332. Right? So I wasn't too worried. I was like, at least I made a profit here. Who cares about the rest? And it actually went up higher, and I sold the rest at 362. Right? So it wasn't a lot. It was like 500 shares that I took from 332 to 362, and I had 1,500 shares that I sold at 342. So it's not a lot. I didn't become a millionaire. But what I'm doing right now is I'm perfecting my strategy. I'm making it a part of my life. And I'm making it a part of how I want to do this. The same way, if I kept on getting late for work and I had to be there at 8 and I was getting up at 6:30 and it doesn't work for me, what do I have to do now is I got to start getting up at 6 so I can get there on time because I want to make a change. Right? So these are the things that really make a big difference. So if you're losing and you're not doing well in the market, first thing is first, you're probably getting in at the wrong time, which everybody does. I do that. The best trader out there does that. Everybody, even the richest market makers, get in at the wrong time. But the reality is that we don't have the money to make a stock move. So we can't think like that. We don't have the same options that they have. We have to think differently, right? So again, this is not so to say advice as to what you should do. It's more like what I'm doing right now and what works for me, and I believe it can work for everybody. It's not complicated, right? We just got to get serious about that. Right, so now we have AEZS. If I got stuck in PRAN, I wouldn't have money for AEZS, so I would have lost a lot of money on PRAN, and then I would have lost a lot of money on AEZS because I didn't get in on time. So now what would have happened is, let's just say I was holding PRAN and I saw this thing moving. I see this and I'm like, oh my god, I'm gonna jump in. 348, I'm getting in. I get into this one and this thing drops. Now I panic and I sell. Or I finally decided to use a stop loss and I hit it and I get kicked out, and then the stock ends up moving higher. Now look at the difference, right? Let's just say you got in at 332 and you get out here and this drops. You don't even care anymore. You're like, whatever happens happens. Now you're actually happy that at least you've recovered your losses or some of your losses from PRAN, right? So these are the things that happen. So we had that. And then I went over to the next stock, ENRJ. Made 8% there, or 5%, 5 or 8, one or the other. I made over there. I don't have my brokerage account on this computer, so and I don't want to log in and open it up and then have to log into the other one in the morning again. But that's basically where I'm at right now. We have PRPH. I like this stock. I alerted it to the members. I said, you know what, I like it, but I like it over, I think it was 208. I said over 208, it looks good, which was right about here. And as you can see, we got pretty close to it, but we didn't get anywhere. And again, it was very little volume. MSDI, this was really, really interesting. I was watching this one at 91 cents. And obviously I wasn't at the computer, so I didn't get in. I don't usually trade around this time here. I got out of the trade for AEZS, and I was just like, you know what, this is good enough, and I moved on. So I saw this one at 91 cents, which was right about here. And I was watching this stock the whole time on my phone, and I don't trade on my phone. I never trade on my phone. But I was watching it on my phone, on Finviz. And man, this stock was just incredible. It went up to about 124, I believe. Yes, it did. So it went up to 124-ish. Yep. So, I mean, if I was in this stock, I would have done the same thing. I would have gotten in, let's just say at about $1, and my goal would have been to get out at 104 or 105 and see what happens with the rest. Now, nobody makes all of this money, but there are some strategies that help you stay in the stock longer. There are different things that you can do. We'll go over those in the coming videos. But for now, I mean, I gave you a pretty good example of what happens with PRAN, and, just take the losses. Take the smaller losses. One of the questions that I ask a lot of the mentoring students is, and I asked in the very first session, and I said, hey, listen, do you have Netflix at home? And almost everybody says yes. And then I say, okay, what if Netflix was charging you $500 a month instead of $10 or $8? Would you still keep it? And they're like, obviously not. It's the same problem that we have here, is if you keep your losses small, they won't matter to you. The same way the $10 don't matter to you, you keep your losses small to $150, $200, $250 max, right? And you have a good strategy, so you only have to deal with the stop loss 1 out of every 3 trades or 4 trades. You're doing perfectly fine, because you lost 250, but on the next stock you'll probably make like $500 or $600, right? And on the other hand, let's just say you lost 250, and on the next one you made 250, and now the next one is a winner, and you made another 250. So you're actually up 250, but I mean minus commissions and whatever. right? So even if you're up, $200, $175, depending on your, your account, that's not too bad. That's not too bad. If you make $175 a day, or every 2 days, or whatever the case might be, it's not that bad. At least what I think. And I mean, that could easily be $1,750, depending on if you have a lot of money in your account, right? So these are the situations, and we just gotta get to a point where we take things seriously. Everybody thinks it's okay to lose because there are a lot of other people losing with them. So you feel like, oh, it's okay, I'm not the only one that's losing. Is that okay? Like, I mean, people are dying off of drugs every single day. You're not dying off of drugs. Why don't you die with them? Because they're dying as well. There are people that commit suicide every day. Why don't you just commit suicide with them? I mean, you wouldn't do that. You're a smart person, right? So the same way, since you're smart and you're intelligent enough to be able to trade and work at the same time, and if you're just trading, you're still intelligent enough to actually make that wise decision to say, hey, listen, I don't want to be working for someone else for my whole life. I want to take things into my own hands, and I want to be serious about this, right? These are the things. You just make the call. Just get out, run, and if that's the only stock that you trade for the day, it's only one day. There's like 200 days in a year that we get to trade. Who cares about that one day? Move on. Who cares? It doesn't matter. Just one stock. Don't hold yourself down. It's the same thing. Like, losing is very similar to, it's very similar to just being, going through like maybe a breakup or something. You go through a breakup with somebody, yeah, it hurts and stuff like that, but you have to move on. I mean, if you're just gonna sit there waiting for that person to come back, like we do with stocks, it's not gonna happen. We're just asking for it. MSDI, look at what happened with this one now, right? If you use the same strategy and you say, you know what, I'll get into a stock, but I'm not gonna hold it below the 13 moving average, right? You get out right here at 110. You don't have to worry about what's gonna happen with the stock on Monday because you're still holding it while it's at 97 cents. If it moves back up above the 13 EMA, yeah, get in again if you want. This is not my strategy, by the way. I'm just saying, I'm just giving you an example. If that's what your goal is, that you're gonna do that, I mean, whatever works for you. But holding a stock, hoping for it to come back up, really bad strategy, especially in this market. There are stocks that are horrendous. Look at this one here. It opens up at $2. It goes up to 205, and it closes the day at 164. You're down 25% almost. Right? So see what works for you. This is not gonna work for everybody, but it's logical. Keep your losses small, and there's no problem. There's no problem with it because it's a part of trading. All right. So I hope this makes some sort of a difference. As I come up with more ideas on how to make the videos, I will continue with them. At the same time, I'm not very good at what I'm doing, but I want to show you that, I will become better at this, and I want you to become better at trading. And we get better at the same time. It's very possible. I believe in you. You believe in yourself. That's all you need. It's not difficult. It's not impossible. Everything is doable. If you have the ability to learn how a computer works, if you have the ability to make the decision to start trading, you have the ability to cut your losses very small, that they don't even matter to you, it won't even matter to you at the end of the day, because you'll have a $150 loss and maybe another $140 loss, but you'll make $500 for the day somehow, because that's where it starts, and we can make it happen. Alright guys, so we'll go over more information in the following videos, and until then, have a good night.